The dollar versus Swiss franc is correcting a little bit in trading here today. I'll talk about the technicals that are driving this currency pair, the key support, the key resistance, the targets, all that in this video. So let's get started. Sellers in the dollar Swiss are trying to take back more control. One of the levels that they've gotten through is this swing area right through here between 0.7986 and 0.7994. This level was defined by a number of different swing highs and lows going back in time. I outlined those levels with all these arrows here. You can see how it got started as a ceiling through here, broke by that ceiling, had some volatility, but then found some support here before breaking back below and finding resistance through here, moving to the downside. The move to the upside here was accelerated after breaking above that level and returned back to this swing area a number of weeks later with the support here. Before moving below it through here. You can see how the prices have moved above and below it and use this level as a key level. We did try to find support earlier in the day at the low of that level at 0.7986, only to find find buyers against the level and push higher. But more recently, we've seen the move to the downside with the somewhat as expected PCE data, which was comforting to the market, that has helped to push the dollar more to the downside in corrective action here today. The next support comes against a 61.8% retracement at 0.7978. If we get below that level, then we could see further progression to the downside, further probing to the downside after the sharp move to the upside. Taking a look at the 5-minute chart, the move to the upside yesterday was a trend-like move. We saw steady buying after the low. If I put a Fibonacci retracement from the low to the high price I'm trading here, trading yesterday, the 38.2% retracement tried to hold support here and here. Did dip below it. We're trading above and below that 38.2% retracement which is what you want to see. If the price can stabilize that level and then get below 50% retracement, then this trend-like move starts to lose some of its momentum. Now, on the top side, what is keeping the sellers more in control is the ability to stay below the 100 and 200 bar moving averages through here. And I like the fact that the price tested the 100 bar moving average not once but twice and found willing sellers against that level. Here, early sellers came in against those moving averages, pushing the price to the downside. So if the price were to rebound from here, and we could see that, watch the 100 and 200 bar moving averages up here on the 5-minute chart to give you sort of an intraday perspective of it. After a trend move, you do get to see corrections, but they can reestablish the trend, and this would be the first indication of more bullishness if the price can get and stay above those moving averages. So be aware, be prepared. That's my look at the dollar versus Swiss for your trading today. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.